You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 27th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. The live training room runs from 9:30 a.m. to 11:30 a.m. Eastern. Then we take a 30-minute break. And then when technology serves us correctly, we start the afternoon broadcast at 12 noon Eastern. So again, today we are running a little behind, but it's been an odd day in the markets, or since we opened last night. In fact, last night I didn't even issue any Logic 247 alerts because, well, if you were there, you saw it. Maybe some out later this afternoon, certainly probably by tonight, I would think. But let's get going. Our daily devotional, word of prayer, little news, alerts. There were concierge alerts, but no logic. Then Michael will join us and give us a recap of what happened in the live trading room this morning. Then we'll do some live trading on the TradingView platform for a half hour and wrap up with our good word for the day. Now, the topic of the devotion we're in right now, day 6 of 7, winning the war in your mind. Philippians 4, verses 4 through 5, that's our scripture today, and I'll share it from the Message translation. Celebrate God all day, every day. I mean, revel in Him. Make it as clear as you can to all you meet that you're on their side, working with them and not against them. Help them to see that the Master is about to arrive. He could show up any minute. Philippians 4 through 5. So let's flash back to Paul. He's in prison, not for a crime, but for speaking about Jesus. He may be executed. He writes to his friends in Philippi, rejoice in the Lord always. Then he sounds like your mama because he repeats himself. Just in case you aren't listening, I will say it again, rejoice. Full disclosure, I hate when people quote that verse to me. If I'm in the middle of a difficult situation, or I have a flat tire, and it's 102 outside, or I just found out I need to have my tooth extracted, or my kid is sick, and somebody says, hey Dwayne, you just need to rejoice in the Lord always. One reason I hate it is because I have to wonder about the person who said it. Do you rejoice in the Lord always? Really? You might wonder about Paul. He told people to rejoice in the Lord when he was in prison. But he did rejoice in the Lord when he was in prison. He did. Paul, along with his buddy Silas. Can you picture them? Thrown into prison, landing on the cold, hard ground with open wounds, maybe a broken nose, couple broken ribs. No doctor, no nurse, no band-aids, no ibuprofen. Have you been there? Perhaps you hit the ground when you found out someone you love had cancer, or that your kid was on drugs, or that your spouse was cheating on you. In those tragic moments, what do you do? What did Paul and Silas do? They praised God. What was Paul doing in prison? Rejoicing always. First, they were praising God for the who, not the what. They were bloody and bound up in prison. If you had asked them, what are you praising God for? I don't think there was any what that they could point to. Nothing good was happening, but their God was still good. They weren't praising God for the what. They were praising Him for the who. And you and I, we can do that too. The circumstances may be bad, but God is still good. He is near. His promises are still true. His love still unconditional. His grace still amazing. His timing still perfect. You may not like the what of what's going on, but you can still praise God for the who of who He is. Second, they were praising God before the provision. So often we hold off on praising God until He provides what we want. Think about that. Doesn't it sound like an entitled little snot-nosed kid? I won't be grateful until I get exactly what I want. We are better than that. And more important, God deserves better. Paul and Silas praised God before He answered their prayers or changed their circumstances. And that's the kind of person I want to be. Third, they were praising God and then He showed up. Paul and Silas were worshiping God in the middle of the night and boom, God shows up. Acts 16:26 says, "Suddenly there was a massive earthquake, and the prison was shaken to its foundations. All the doors immediately flew open, and the chains of every prisoner fell off." They did not praise God because He showed up. God showed up because they praised Him. When we praise Him, He will show up. When He shows up, it will change our thinking. And if we change our thoughts, well, we change our life. Let's pray. Heavenly Father, we rejoice in You always, knowing that You are near. Help us to let our gentleness be evident to all, reflecting Your love and grace in our words and actions. May our hearts be filled with joy and peace as we trust in Your presence and promises. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And yes, it's Monday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 78 points. The NASDAQ is down 662. That's a little over 3%. S&P 500 is down 112, 113. That's almost 2%. And the Russell 2000 down 16, about 3/4 of 1%. In the commodity basket, crude oil down $2.11. trading 72.57 last. That's a drop of almost 3%. Gold down $45.30, trading 27.3360 last. That's a drop of over 1.5%. Silver down $1.08, trading 30.10 last. That's a drop of 3.5%, or over $5,000 per contract traded. In the Asian markets at the close, the Nikkei fell 366 points, 1%. Shanghai dropped 2. The Hang Seng gained 131. And in the European markets at the close, FTSE up basically a point. The DAX down 112. The CAC down 21. So it was a mixed day in Asia. It was a mixed day for the UK. And so far, it is a mixed Radio Monday here in the US of A, with only one of the major indices in the green, and that would be the Dow. 86 points, which isn't a lot for the Dow. So we'll see who follows who. In news, President Donald Trump announces a 25% tariff on all goods entering the U.S. from Colombia yesterday, after the country refused to accept a pair of military cargo planes transporting deported Colombian migrants. Travel restrictions for Colombian officials were also imposed. Colombian President Gustavo Petro promptly responded with a 25% tariff on goods entering Colombia. Colombia is one of the largest U.S. trade partners in Latin America, with the two exchanging nearly $54 billion in goods and services annually. The U.S. is also Colombia's biggest market, with its primary exports being crude and coffee. The planes reportedly had authorization to land upon departing from San Diego, which was revoked mid-flight. Petro said the deportees must be treated with dignity and respect before returning. Trump threatened to raise the tariffs to 50% after 1 week. Now, I read somewhere else that Colombia had decided to go ahead and accept those illegal immigrants. Maybe it'll pop up in one of our other news articles. The Nasdaq sank today, leading a stock sell-off on Wall Street, as a Chinese startup rattled faith in U.S. leadership and profitability in AI, taking a hammer to Nvidia and other big tech stocks. Markets have been rattled by claims of China's DeepSeek, that its AI assistant uses cheaper chips and less data than leading models, but performs equally well. A surge in DeepSeek's popularity has spurred investors to question bets that AI demand-driven growth will keep fueling gains for stocks. AI bellwether Nvidia shares plunged over 13%, as chip-related names took a bruising. ASML down over 6%. Broadcom and Micron also got hammered. Shares of Microsoft dropped more than 2%, amid worries about megacaps' hefty investments in AI. Google parent Alphabet, Meta, and Amazon all lost ground, as most tech names faltered. So, What is DeepSeek and why is it freaking out the AI world? DeepSeek, a Chinese AI startup that's just over a year old, has stirred awe and consternation in Silicon Valley after demonstrating breakthrough artificial intelligence models that offer comparable performance to the world's best chatbots at seemingly a fraction of the cost. DeepSeek's emergence may offer a counterpoint to the widespread belief that the future of AI will require ever-increasing amounts of power and energy to develop. Global technology stocks tumbled in late January as hype around DeepSeek's innovation snowballed and investors began to digest the implications for its US-based rivals. So what exactly is DeepSeek? It was founded in 2023 by Ling Wenfeng, the chief of AI-driven quant hedge fund High Flyer. The company develops AI models that are open source, meaning the developer community at large can inspect and improve the software. Its mobile app surged to the top of the iPhone download charts in the US after its release in early January. The app distinguishes itself from other chatbots like OpenAI's ChatGPT by articulating its reasoning before delivering a response to a prompt. The company claims its R1 release offers performance on par with OpenAI's latest and has granted a license for individuals interested in developing chatbots using the technology to build on it. Well, is it propaganda or is it real? I guess we'll find out pretty quick. Treasuries rallied today as investors flocked to the safety of U.S. government bonds after equities slumped in the sell-off, which was driven by technology shares. The yield on 10-year U.S. notes fell as much as 12.5 basis points, the most intraday in almost 2 weeks, to 4.5%, before pairing the decline. The 2-year rate, which is highly sensitive to expectations for Federal Reserve policy, dropped 10 basis points to 4.17%, the lowest in over a month. Haven currencies, including the yen and the Swiss franc, surged. And oil. They took the hammer to oil too. Oil slid as risk-off sentiment in wider markets and the Trump administration's rapid-fire trade moves rattled investors. West Texas Intermediate fell more than 1% to below $74 a barrel, tumbling alongside equities as concerns about Chinese artificial intelligence, DeepSeek, fueling a rout in the U.S. stock markets. Adding to the headwinds, economic activity in China, the world's largest oil importer, faltered at the start of the year and factory activity shrank. President Trump also unsettled markets by ordering tariffs against Colombia because of a dispute over migrants, before pausing the actions after the country agreed to his conditions. There we go. Trump has also threatened action against China, Canada, Mexico, and the European Union, while urging OPEC to help lower prices. He's argued that a decline in oil could starve Russia of revenue and help put a halt to the war in Ukraine. Well, gee, that would be nice. Now, as I said, I did not put out any Logic 247 alerts last night. But I did put out the CTAs I try to get them out 5 minutes ahead of the open, but last night it was, well, it was just a wild night. You'll see it when we go to the charts, just how wild it was. If you're a member or trial member, be sure to read this information up here. Make sure you understand it. If you don't, ask, so we can clarify it for you. So 35 minutes after the open last night, all members and trial members had these targets: the S&P 500 E-mini, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. So 5 minutes into the second candle after the open, that's when the targets were published. So let's go take a look at the chart. Start with the ES daily chart, as we do each day, and you can see that big gap down. Wow. Friday's close, 61.32. The open last night, $61.02. So it's about a 30-point gap. Now, interestingly, it raced all the way down through the BBC, and it hit the top of this trend line, okay, that we drew in a few weeks ago. We connected that to that, gave us good resistance, and then we find support. Kind of spiked it just a little bit. We actually hit the 24% fib retracement. So there's two reasons the market could find support there. One's the 24% fib retracement and the trend line. I think in this case, more importantly, probably the retracement. When we hit the 38% fib retracement, that gave us this huge rally, which looked like it was just on the cusp of taking out the all-time historic high. But it didn't. Things reversed, and this is going to make your charts a little wonky for a few days as this thing straightens itself out from such an unusually big move. See the open, what was it again? Uh, 61.02, and the low was 59.48. So we just got to let the market sort itself out and regain its rhythm. Rhythm is like this: leg retracement, leg retracement, leg retracement, leg retracement. Now the pullback to the VBC, the green line, pullback holds more often than not, whether it's pulling from above or pulling up from below. Sometimes it'll spike it, as it's done in this case. And now where are we sitting? We're sitting right on top of the BBCS support. So even if you took this part out and you only had this part, that would be something. But you don't. You have price traded all the way down here. So that deep seek really freaked the markets out. We got Fed coming up on Wednesday. So I don't think anybody's expecting an interest rate cut, but we'll see. The president said he was going to apply pressure. We'll see if he does and if it does anything. The daily chart is important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Many of these institutions have accounts in the hundreds of millions, billions, even trillions of dollars. They trade in tremendous size, and when they do, that moves price. So what I encourage is whether you trade futures or stocks or crypto or Forex or ETFs, just spend 2 minutes with the daily chart before you start trading whatever it is you're going to trade, and peek over the shoulder of the deep pockets. See what they're doing. Okay. Right now they're not doing anything except sitting on an area that we would expect to be support. So we've spiked it, but so far it's held. Now if we were to get a candle tomorrow that opened and closed below the BBC, then we would say it didn't hold. So not only does looking at the daily chart give you a peek over the shoulder of the deep pockets that move price, but you're also able to identify rather easily where the major areas of support and resistance are. Like on your smaller time frame last night, you would not know that you were hitting the 24% fib retracement on the daily chart. You're able to spot areas of major potential resistance and support that often you cannot identify on the smaller time frame. Now the 30-minute charts, that's where all the alerts are created, both concierge and the logic 247. The vertical line separates today Monday, back here's Friday, back there's Thursday. Right here, this little green candle that you see behind that line, that's Friday's close. Here's the open last night. Now the weekly trading zones come out Monday morning at 6:15 a.m. Eastern. So these targets were based obviously off of last week's alerts. Any alerts that go out today will be based on this week's zones. Once they come out at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. So we had this huge gap lower open. Now under normal market conditions, when you have a gap in the indices on Sunday night, typically that gap will fill within a few hours, or at least within the session. I don't think that's going to happen today, because you got this huge gap and then it continued lower. So when we got to this zone, we consolidated for an hour and a half. Okay, it was 5 minutes into the life of that candle right there. 5 minutes into the life of that candle that the CTAs came out. And so as we traded below that weekly zone, 60.97/98, took us right to the short target. We consolidated there for just a little bit. Then we got a leg and a retracement right back up to that target. Support coming down, resistance coming up. Now here's another unusual thing. When the step line crosses from the left side of red and falling to the right side of red and falling, we typically get a retracement back to the BBC. That didn't happen. The bottom just continued to fall and fall and fall. And again, the low was 59.48. Market did find support at that 24% fib retracement on the daily chart. Gave us a nice bounce, and now we're just sitting right on top of the daily BBC. So price is consolidating here at the zone from last week. When price encounters a weekly zone, again under normal market conditions, 70% of the time you'll get consolidation like this. 20% of the time you'll get rejection. 10% of the time you'll get the slice. That's when a 30-minute candle slices through a zone like it's not even there. Like here, this was a red candle that sliced all the way through, but when I ran out of steam, it reversed back to the zone it sliced through, and then it continued in the direction of the slice until it hit the 24% fib retracement on the daily chart. That brought buyers in. So we're above the BBC, but blue and climbing has gotten directly above the current candle. Okay, so obviously red and falling is bearish, blue and climbing is bullish. But when blue and climbing gets directly above price, it can in fact turn into resistance because it's often on its way to becoming red and falling. As you can see right up here, blue and climbing turns to red and falling. When you have blue and climbing, you expect higher prices. You got red and falling, you expect lower prices. But again, this was unusual right here. Don't doubt that we'll see other unusual things. Okay, the gap lower open on the Dow wasn't quite as severe, but it did take us down. It was 5 minutes into this candle that the targets came out. See, we have that same little area right there where the step line crossed, and we would typically retrace to the BBC, but not last night. We didn't. We dropped to the short target, consolidated there for 2 candles, continued falling, and we overshot the zone at 44,150/155. We put in a low on the session, 44,009. Buyers come in. We get a leg, we get a retracement, we get a leg, we get a retracement. Then right here we get a bullish cross. That's when the blue line gets above the green line. And we've had a leg up, and a retracement, and a leg. Now the high of the day, if you look left on the horizontal cursor, it's basically this area here that we tried to get above on Friday. Okay, and so far we haven't done it. So, and you can see that the step line, it's starting to kind of lean to the right. Again, under normal conditions, when the step line crosses from the left side of blue and climbing, when it crosses over to the right side, typically see a retracement back to the BBC. So the Dow is actually already above this gap lower open last night. That's why when we went through the numbers from around the world, the Dow is the only one in the green. So on the Russell, gap lower open, came down. There's this candle here where the targets came out. So we came down through the zone, last week's zone, and we hit the target to the tick. That gave us a little bounce, and then we came back to this zone from last week at 22.91.92. We spiked it a little bit, pulled back to the BBC, and it held. However, red and falling turned to blue and climbing. That's bullish, and so that took us up to the zone. Resistance set us back to support at the BBC, and we hit the target to the tick there, it looks like, at 23.28. This was Friday's high, but right here, that's what our target was based off right there. So we get back below the BBC. Blue and climbing looks like it's about to turn into red and falling. Now this area held up pretty good overnight and into the early morning before prices took off. The Russell, it has now actually filled the gap, but no sooner did it fill the gap than we come right back into this area. So we're printing a red candle, blue and climbing. Looks like it's going to turn to red and falling. So my anticipation would be we're going to come back to this area, and if this area doesn't hold its support, there's no telling how far this thing could drop. Now, all the angst was based on this, the NQ. This huge gap lower opened last night. Opened right at this zone, 755/56. And then it was here that the targets came out. And in pretty short order, we got there. This candle opened at 65. And it basically dropped 65 points right to the target. All right, let's see. The open was, let's do that again. This candle opened at 643 and we dropped to 560. That's more like 80 points. At $20 a point, that would be $1,600 per contract traded in that one candle. You can do the math on all the rest of this. The NQ, there's 4 ticks to a point, $5 a tick, $20 a point. Now, this bounce took us back up to this zone, a little consolidation, and now we're back below the BBC, and it looks like we're getting ready for another move to the downside. There's the potential for support right here, here, of course here, and here. Okay. This is pretty extreme. I don't think we'll go back to visit that, but maybe we'll find support here in this area. Plus, members and trial members have the new zones, and of course they'll be on my charts tomorrow, because any alert, whether it's a logic or concierge that's published, will be based on this week's zones now that they've come out. But this is what took the whole market down pretty much. I mean, that's a huge move for the NQ. Crude oil opened here. We dropped to the zone, consolidated for just 2 candles. The targets came out on 5 minutes into this candle, and then we dropped, hit the short target, red and falling turned to blue and climbing. We got back above the BBC. We hit the long target, backed up, made another run at it, and we failed to take out Friday's high right here. But crude's been in a downtrend now for, I think, a couple weeks. So the failure to take out Friday's high, that sends us back to the BBC. This pullback does not hold. It holds for a little bit of a bounce there, and then crushes through it. Consolidates at the zone, pulls back to the BBC, spikes it in red and falling, but the downward pressure, it's still on. Now we're off the low of the day by a little bit. Low of the day is 72.38, low of the session, and we're currently trading 72.58. So, and As you can see, you got the perfect stack coming down. Price, step line, red and falling, BBC. So we may have further to go on crude to the downside. Not just today, but in days to come. Gold. This is where we opened last night. Pull back to the BBC, the pullback hill. And that sent us down to the short target, through the short target. And then we found support at the bullish cross from last Thursday. Remember, that's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So if you look at the horizontal line on the cursor, you can see it. The second time down was a different story. It came all the way to the zone, found support there, traded back up to the zone overhead, and wasn't able to take out that swing high from early last night. And then that's when the bottom sort of fell out on gold, taking us across several zones. And here we are right now. Now the step line is attempting to cross red and falling. If it does, then there's the potential for price to move back up to the BBC. But again, pullback holds more often than not, so if it does make it back to the BBC, the market's certainly not out of trouble. I could easily put in another leg back down to this zone at 40/41. Silver. Incredible. Here's the gap lower open. So the open was at 30.99. And we put in a low at 30.03. So we came, this is the candle where the CTA targets were published. So we came down, and we did hit the target pretty much to the tick. Support will always send the market looking for resistance. Resistance will send the market looking for support. Now we're looking for resistance. We found it right here. It was an attempt to fill the gap, but it didn't work. And that gave us a low on the day of 30.03 half. And that covers it. So, Michael is here.
I am.
He'll give us a recap of what happened this morning in the live training room. And we'll do some live trading on TradingView. And then I'll wrap things up with our good word for the day.
Excellent. Here we go. You see everything okay?
Yep, looks good.
All right, good. All right. So, good afternoon, everyone. Today is Monday, the 27th day of January, 2025. It's our last Monday of January, 2025. So, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on the purple button right here. When you do that, it's going to bring you to this registration link where all the answers, your name, your email, your phone number, down here at the bottom. This is not the right registration link. It's going to bring you to this registration link. That's the registration to get into this meeting. This is the registration to get into the meeting for next week, or for the rest of this week. Go here and there's 5 multiple choice questions. Just answer those down here at the bottom. If you have NinjaTrader, give us your machine ID if you want to use Ninja Charts. If you're not using Ninja Charts, then we don't really need the machine ID. You should get TradingView and gives you TradingView login ID, okay? Because the main indicators that we're using are on TradingView and nothing else. They are right here. These guys down here are only on TradingView, okay? So, yeah, do that. Give us your TradingView login ID, all right? Your TradingView login ID. If you don't have a TradingView login ID, then you should go here to mytradingiq.com, click on trading platforms, scroll down to where it says TradingView platform right here, click play, and watch that. It's about a 3-minute video, but ultimately you just have to click on this link. It's going to bring you here, choose monthly, and the essential will work. For people who are just starting out, the essential will work fine. It says it's $14.95 a month, but it's a 30-day free trial that you get with them. All right, so it doesn't cost you anything to sign up for the essential. And you are going to have to pay for real-time data. The real-time data is $7 a month. All right, $7 a month. You know, most people already have some sort of data by the time they get into it, by the time they get to us. So that'll all work itself out. Now, what did we do today? If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Okay, so this is today. All right, so on the morning session today. Today, as I said, is the 27th day of January 2025. We made 19 ticks on the NQ. We lost 25 on the Russell. We made 11 on gold and 90 on the ES. I was really trying to get to 100 on the ES, but I stopped out toward the end. That put us at $1,205 with one contract this morning. Okay, today it took 4 minutes and 2 trades to get to the goal for the day. At that point, with 10 contracts on, we're at $4,000. So 4 minutes, 2 trades, $4,000. That's $2,000. No, $500 a minute is what I was making there, I guess, right? Anyway, the day before it was $1,000 a minute. Better. Anyway, we took a total of 37 trades this morning. So on the month now, with one contract, we're up $27,237.50. So for 16 trading days, averaging $1,702 per contract per 2-hour trading day. All the same stuff here for the end of the monthly and the yearly right now because it's January. The 24/20 blueprint. If you were to quit trading when you get the goal for the day and you were to add one contract for every $2,000 that you made, or let's just say one contract per month, because we would have already added another one this month. If you were to add one contract for every $2,000 that you made, or one contract a month, so far this year you would have only had to work 1.41 hours, 1.41 hours, and you would have averaged $2,207 per hour. Okay, $2,207 per hour. It's real money. You can do it too, right? All you have to do is go out here, take the trial, get in the room, and learn. It's not hard to do, right? It's hard to consistently do it if you don't follow your own rules, but it's not hard to do overall. So let's get into the actual trades that we did do. Okay, something is wrong with this. Let's go here. It's in view only mode. So if I go here, this is how you get out of view only mode, just in case you guys don't know. Right, I could hit copy right here and it would give me another copy of what I have this morning. But you go here, click on that, and go to home. Okay, you can leave that and go to home. It's gonna bring me here to products, and I will click, not that. It's gonna bring me to products, and it brought me to this one here. Let's go to the one that I was trying to go to. Oh, I am logged in as the wrong person here. That is the problem. Let's fix that. I don't know how I ended up logged in there. I shouldn't have been. But let's go here and log in here. Okay, and then go here. And this is what we did this morning. Excuse me. All right, so we did have some trades on every market today. Not much on the gold and Russell, almost all of it on the ES. You know, of the 30, however many trades it was, how many was it? 37 trades. 5, 10, 15, 20, 24 of them were on the ES. So this shouldn't take long to do the gold and the Russell. We started out here, our first trade on gold was right in here, was a break even. These horizontal, these vertical lines that you see in here were actual trades. This was a long, this was a long, this was a short, this was a long, followed up by a short. But anyway, in here on gold, we took a break even there, then we took +6 on that, a break even there, and +5 on that to get us to +11. Now, +11 ticks on gold with one contract is $110 per contract, right? But I had 10 contracts on, so that's $1,100 I made on gold in those 4 trades. Excuse me, I'm gonna have to take a drink. All right, well, that's not much better, but my throat's not that dry anymore. All right, so the other trades that triggered during the break, there was a long trade from right here. This was the signal bar, this was the trigger bar. Okay, same thing right here, signal bar, trigger bar, that one would have stopped out. Right here, signal bar, trigger bar, that would have been a break even. Signal bar, trigger bar, that would have given you some profit. Signal bar, trigger bar, that would have given you a lot of profit, well, a pretty good profit. Signal bar, trigger bar, that would have given you a lot of profit. Signal bar, trigger bar, that would have pulled back really deep before it gave you a bunch of profit. And signal bar, trigger bar, that would have given you 10 ticks profit. And it's just about another trade right here. You guys see those trades, right? They're really simple things. You're just looking for the blue to get into the oversold by itself, or get into the overbought by itself. When it does, the open of the next bar is your trigger. Okay, that is it for that one. Now the Russell, we only had a couple of trades on the Russell, and we had to break even and stop out. Those are our 2 trades on the Russell this morning. Doesn't mean that's all there was, but that's all I got. Look back here, there was a trade. Let's go all the way back. Right here, right at 9:30, there was a long trade. Here, I'll put it on the trigger bar. Okay, that one. That one, followed by that one. That one. I think I missed one. Right there. Oops, right there. I don't have the thing. Okay, so these were all trades. I'm not going to go through them all, but these were all trades that were available there on the Russell today, right? The real obvious ones are the ones where it's just all by itself when it goes into it like that right there. Those are the real obvious ones. The ones that are a little harder to see are the ones that kind of go down and get a little sideways on you, like that one right there. Okay, now that, if you got long right here at the open of this bar, that would have definitely stopped you out. Okay, you could have made it right back on the next trade though. You would have stopped out on this one right there, but you could have made it right back on that one. It's just a 15 tick stop. I'm sorry, this is the Russell. I'm sorry, it's 25 tick stop. It's a 20 range bar, so you could have made it back and then some right there on the very next trade. We did take that and we stopped out, and the very next trade on that, it was 11:31, so we were done for the day, but the very next trade on that would have been right there and I could have gotten it right back. Okay, I am working on something so that it'll pick out these flat spots for you, so you don't have the flat spots anymore. I have something that was really cool that was pretty close, but then I got totally preoccupied with something else. I am in the midst of developing an NQ channel. Let's see, the ES. So what do we end up with on the Russell? We ended up with minus 25. After those 2 trades, we ended up with minus 25. And the ES, we ended up with plus 90. I'm gonna do the NQ first because we ended up with 19 on the NQ. All right, and the market started off just crazy this morning, crazy, and the NQ was really, it was almost untradeable, even on a 50 range. Okay, but I'm going to go all the way back to the beginning here. All the way back to the beginning. And we'll just look at some of the things that we did do. All right, so our first trade in here was a break even. Then I took this trade and I screwed this one up and I ended up stopping out on it. It wasn't even a valid trade, but it still went way into profit, and somehow I still ended up stopping out on it. I don't know what I did wrong on that one. But then over here we got it back. So at that point we're at minus 60 on the NQ. Then right here we got plus 75 on the NQ. That brought us to minus, I'm sorry, no, we got plus 48 on the NQ. That brought us to minus 12. Then we had a plus 18, it looks like. No, we had a plus 75. That got us up to 63. That's what it was. This was a plus 75. This was a plus 48, a plus 75. So we're plus 63 at that point. And I had a break even, and both of those I had a lot of profit in before I got taken out of break even. Then here, it doesn't look like I wrote that one down. Did I? No, I didn't write that one down. Okay, well, there's a couple of things that I didn't write down in there. I didn't count that one that we got the profit, and I think I did. We stopped out in here somewhere. There was a stop out that I had. that I don't have in here, but we went from 63 down to 3. And I think that one there we got 12 ticks. It got us, I'm sorry, 16 ticks. It got us up to 19. I think that's what that was. Right, and I don't think I traded the NQ anymore, but I did highlight a whole bunch of trades that did trigger in there. There was a break even right there. I guess I did trade it one more time. There was a break even in there. Now during the break, the easy and obvious trades are the ones in hindsight where you see it's going down into it and coming right out. Those are the easy and obvious trades, but you don't know that that's what it's doing in real time. If we go here to the very end, if this gets up here into the overbought right now, you don't know that it's going to be the only time it goes, or you don't know it's going to pop right back out. I do have something that I'm working on that will do that analysis before it goes in there, before it goes into the overbought. They'll do the analysis and they'll say, well, is it going by itself? If it's going by itself, then there's a better chance that it's going to come right back out. And there's a little more analysis to it. At one point, I am going to finish that analysis. I'm going to make it so that it will be just that going into the overbought, okay, by itself. All right, now I did something this morning to all the active TV trades people. There was an email that you all should have gotten this morning. I'm hearing that you did not get that. Right, but that was it on the NQ. We only had those handful of trades right there, 7 trades it looks like. Now the ES. Sorry, I just got totally distracted there about that email that I sent out that nobody got. On the ES, let's see. You can see we had a ton of trades here, and I was using this for training this morning as well. This was our first trade on the ES right here. We grabbed this one, and when I rebooted, it brought my bracket back up as an 8x32 instead of a 10x30, but it gave me all 32 ticks right there. So we got 32 ticks on the very first trade. That's how we ended up with $4,000 with 10 contracts on the first trade. That was our very first trade. Beautiful way to start out. It was actually a second trade. Our first trade was a break even on the NQ. But then we did that one, and that was a great way to start out the Monday morning. Then we had a break even. Then we went from 32 to 44, and then we had a break even, and then we stopped out. We went from 44 down to 34. We had a break even, and we went from 34 to 42, and then 42 to 50, and then break even, and then 50 to 58, and break even, and then 58 to 60, and then stop out down to 50, then break even, break even, break even, then 50 to 54, then 54 to 62, then break even, then 62 to 74, then 74 to 78, then we missed some stuff in there, then 78 to 86, then break even, then 86 to 88, then 88 to 96, and I was so close to getting to my 100 tick goal that I was trying to get for the yesterday, and then bang, stop out, back down to 86. Then I got 4 more ticks right there, and that was where we ended it for the day on the S. But there was a ton of trading there on the S, and I didn't even get them all. Now, there's a bunch of trades I didn't get in there. You know, I was doing some training right through here, and I don't think I got any of these. It was a beautiful trade right there. Another one right in here. Looks like right in there. That might have stopped me out if I'd have gotten it. Had a reversal right there. I could have gotten a good chunk of that back. Right there, really nice trade. Right here would have been enough to get 6 ticks. Right here would have been enough to get a bunch of ticks. Right here would have been enough to get a bunch of ticks. So there are a bunch of trades in there that I didn't get this morning. The S was pretty wild. For a little while, I was only trading the S. Now let's look at this chop right here. Normally I would look at this chop and I'd say, oh, that's awful. You can't do a darn thing in there. Well, times have changed. You could have gone long on that bar right there and gotten the goal for the day. You could have gone long on this bar right here and gotten the goal for the day. You could have gone short on this bar right here and gotten the goal for the day. You could have gone long on this bar right here and gotten the goal for the day. You could be long right now. Let me see if I can find my diamond. I will be. Here it is over here. And there it is. I am long right now. Okay. The blue led into the oversold. So you buy the open to the next bar. The open's there at 14.75. I get a better entry. Stop to break even. Stop to +4. Look how easy that is. How easy is that? This platform we read only and not support trade execution. Effective close of business Friday. on the 31st. Thank you. Thank you all for that. But you see that right here on all this chop, where normally we would say you just can't do that. You just shut it off and go do something else. There's a winning trade here. Right there. There was a winning trade right here. There was a winning trade right here. It would have been on this bar, right? You would have bought the open of that bar, but it didn't pull back enough to stop you out. Okay, actually that might have not been a winning trade. That might have been a stop out at the end of it all. There was a winning trade right here. There's a winning trade right here. And there was just another winning trade that's happening right now, right here. I think this one would have been a stop out, I think. This one right here. So in this space here where normally you would not want to trade at all, there are 1, 2, 3, 4, 5, 6 trades with one stop out, and all the other ones would have been enough to get the goal for the day. So 5 times the goal for the day on one stop out. So if you take the stop out, and let's say that wipes out one of the positive trades, you still have your goal for the day. 5 times. 4 times, sorry. It's never been this easy, really. It's never, ever been this easy. See the signal bar and the trigger bar. Signal bar and the trigger bar. You see them, right? I'm not making this up. Never been this easy. So there was a big, giant gap in the markets. I'm sure Dwayne went over all this. Look at this big, giant gap right here. That needs to get filled at some point. I didn't notice that. I noticed, I was up in the wee hours of the morning. I noticed the crypto was getting hammered, but I didn't look at the markets. I was busy creating stuff and all that. But that is interesting. That gap's got to get filled at some point. I was saying this morning, if you go look at this on a daily right now, I was saying, can't really see it on a daily, but I was saying this morning, I don't know what the weekly trading zones are right now, but I got to think we got to be pretty close to the bottom of the weekly trading zones. Let me go check that out. Let me go check that out. Wait, oops, here are the weekly trading zones, and the lowest zone on the ES is 60.36. So right, we're actually not anywhere near the lowest zone on the ES. Is that the right one? Let me check and make sure. On the ES, yeah, 60.35, 60.36 is the lowest. Okay, so that's still a ways below us. I thought we'd be down there with that huge move, but I guess we're a couple zones away from it. Pretty close to it though. But when you have that kind of a gap at the beginning of the week, that gap's usually going to get filled, and so it's a time where you could consider buying call options. And you know what? This week we have FOMC coming out on a Wednesday, so there's a lot of things that could push the market around this week, and that gap's going to get filled. This gap up here is going to get filled. Usually the futures happens right away. That could happen overnight tonight. If we're not able to do it with the US markets today, that could happen when Asian markets, European markets open up tonight or in the morning. Just my thought. My 2 cents for what it's worth. My big picture views, which really, it's just scaling all the small picture stuff. Right. On the gold, there is a trade right there on the gold. You see how it went flat over here on the gold? It went flat right there on the gold. Now, that sadly is a trading opportunity that did not go directly up as soon as it triggered, but I was able to just get in here right here. I mean, the actual entry for this was the open of this bar right here. Was it? Oh, it was the open of this bar right here. Okay, so it was the open of that bar, so it was even better. 37.1, I'm at 36.2, almost 9 ticks better than the open. It is going to go up eventually. Hopefully it's going to go up before it goes sideways. But it looks like it never did go 5 ticks into profit. If it did go 5 ticks into profit, I'd be wrong in taking that trade. All right, it's 119. Where does the time go? All right, there's 5 ticks. Stop to break even on this. Now, where should it go? At a minimum, it should go up here to 37.9. Go up to right here. That's where it should go. All right, now, I know we're using a different trade entry technique than we've used in the past years, but everything else that we do is still the same. Okay, everything else that we do is still the same. Here's your leg down. Here's your leg up. Here's your retracement of that leg down. So we should have another leg up right here is what I'm thinking. This leg down one ended up being a little bit of wacky chop right there, wide-ranging chop. So what should happen here is this should get up above this. And to fulfill the diamond principle, it should go like that, and extend that up right about here in time, right about there. 1326. Should be up here to 2740 area by 1326. Okay. So what you see right now is it's doing everything that we kind of wanted it to do. Why did my stop not move? Anyway, it's doing everything that we wanted it to do. And there it goes. It just moved and it took me out. But I'm expecting it's going to get up to the prior swing high here and then exceed that and get up to there. Now, it might not go straight up there. It might go up and down a little bit before it gets there, because the markets seldom go in a straight line. So when it goes up, it might go up and then pull back and then go up like that. That's what I'm thinking. All right, let's erase that. Put this back over, see if we got anything else going on. There was a Russell trade right here a few minutes ago. You guys see that? It's right here. And this did not continue to move up, surprisingly. Got a couple of ticks profit on that. And the NQ's got a trade right where it is. Okay, where it's sold off right here into the oversold. And right there is where you should have been trying to get filled right there at 68.75. 68.75. It has not gone into profit yet. It's in some chop right here. So we'll pull back on this. You kind of expected, I guess. But it's in some chop. And here. Here you go. Stop to break even. I'm going to lock in something on this because I hate to get a break even after it's given 30 ticks in profit. We'll see, it's pulled back 50% of this bar length right here. So we'll see if it pushes up off of that 50% pullback of the bar length for a full bar length up. That's what I'd like to see. But nope. 1 point. 1 point. Okay. And nothing anywhere else yet. I don't see any other trades coming in right now. The NQ is about to give a long trade right here. Right, and the gold is given another one. Now, the thing about the gold is the last one that we took did not put in a higher swing. It did not go up into the overbought. All right, it's not really, because we're using the slingshot in here, for the divergence trades. It's not really a requirement, though it is something you should note. Right, we're working, because we're using the slingshot in here to take the divergence trades. We're trading trend and counter trend. But if you're using the YBR for the trades, that is something you'd have to pay attention to. Okay. But it's not really something we need to focus on because we're doing the divergence trades using the ultimate slingshot as the diverging line. All right. Heck, I'm long on the NQ. Crap. Yeah, I thought my stop would break even. I didn't realize I got long on that. All right, I'm going to lock in some profit on that. There's 16 ticks right there. Okay, because it is given an actual short right here. So I'm pretty sure I shouldn't have shorted it right there. And the gold is going against me. So my stop on the gold should be 15 ticks away, right? There, it should be there. All right, the NQ, I think I screwed that one up. I should have been short at the top of that bar, not at the top of that bar. So I'm going to lock in 4 ticks, 8 ticks, a whole bunch of ticks for a minute, 61.50. There. 6 points, 24 ticks. Okay, so the gold is still functioning. The ES, I missed it. It would have been right here at the open of that bar, right there. But you see, this is simple, right? This is not hard to do. To get in there, put the trades on, and just follow the rules. I just got an email from one of our guys who is doing the Apex funding with 2 accounts, and he got his goal on both accounts this morning. Said he traded for 75 minutes. Let me read it. Said, first account had been in the red, but then in the black again, and wanted to thank me. It's double goal, patience and perseverance. He traded gold on the London Open is what he traded. All right, so this is going to get 5 ticks in profit. There it is, stop to break even. And on the first account, it was up 90, then took a stop out, but then came right back and got to 102. And then on the second one, he took a 21 tick winner on gold, and that was it. He got his goal for the day on both accounts. This stuff is perfect for that. If you're doing that kind of thing, if you're doing the prop trading and all that, this stuff is perfect for that. Okay. I was just going to go plus 10 there, plus 10. It's $1,000 right there. So where should it go? I drew in all those things before. My time and space thing was up here, right? Time and space thing was up there. Well, we're in there as far as time goes. We've already gotten to the time. We haven't gotten there in price yet. But I was just guesstimating it anyway. The way to actually do that, I was guesstimating it based on this possibly going up straight from this pivot right here, but it went down further. So now the way this would actually work, the way the whole diamond principle would actually work on this, let me show you. It wouldn't be this time right here where it exceeded the prior swing high right now. This is now your time. So this is where it should be, all the way over to here. So both things get exceeded here. Let me just show you. Okay, so this was your timeline, and this ended up being your price line. So if we take this timeline and we start it over again, then that's the timeline, and this ends up being your price line. Okay, that first one that I drew up here was based upon this pullback right here, but it pulled back deeper. And so it took longer for it to get out of here. I was thinking it was going to pop out right over here, and that would have extended it that far. Does that make sense? The diamond principle, let me show you. I only got a minute, but let me show you. Move this up and get a drawing space. Now, you have your pullback like that, right? And then you have your push up like that. This space right here, this space is your time element. This space is your price element. So what you anticipate, once you break through this, that's what we hadn't done when I did that first estimation. We hadn't broken through there, but once you break through there, then you have confirmed your time element. So then what you do is you take that and you add it to this side. And you've also confirmed your price element, because now you have your low. Originally I had done it prematurely on that one, and I had thought it was going to be like right in here, and then it was going to exceed like right up in this level right here, but that didn't work out. It went down further. So we were able to take a little bit of profit on that and then get some on the next move. But this is what you should do. Okay, that's what it should do. Right? Why is that a diamond? It should be a right angle, right? My right angle principle. But anyway, the reason I call it the diamond principle is because if you do that and that, you have your time and price and just extend that out to here. That's why. Okay. All right. Oops. That is going to be it for me for today. Let me bring that back down. Double click on this. All right. So you see it's getting up there. This is the pullback that I was talking about earlier. It's going to go up and then pull back. I think I drew that in there earlier, right? Didn't I draw that somewhere? Probably go up and then pull back and then make the next leg up. That's what I was talking about earlier. Anyway, all right, that is it. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that. It's going to bring you to the registration page. Give us your TradingView login ID. And give us your machine ID if you have it for NinjaTrader, but that's not as important as the TradingView login ID. Give us that TradingView login ID and have the indicators indicating on your charts when you take the trial. All right, that's it. Thank you all for coming, and I will pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am.
Excellent. Excellent.
Recap of the recap of the morning
session. The morning session. Today took 4 minutes and 2 trades to get to $4,000 with 10 contracts.
Good job. Great start for the week.
Yeah, it sure was.
All right, guys, if you want to become a member, all you got to do, send an email to support@cfrn.net. In the subject line, put, "I would like to become a member." In the body of the email, put your name, telephone number. We're not going to call you, but we will send you an email. And in that email, it'll explain everything that's entailed with becoming a passport holder. And there's a link in the email that you can click to actually become a passport holder. You get 2 hours of live training in an interactive environment every trading day. It's 2 hours of group training. Interactive environment, you're asking questions, you're trading along, you're learning the strategy, but you also get access to private one-on-one mentoring. There's no extra charge for that. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock, the Concierge Trade alerts the second they're published each evening. On Monday morning, you'll get the weekly trading zones at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop on Thursday night. Everything a trader needs, all under one roof, one low price. Plus, you get access to the private channels in Telegram. We have public channels, private channels. When you're on the trial, you have access to the public channels. And once you become a passport holder, then you have unfettered access to all the different channels in Telegram. And we have quite a few. All right. With that, let's wrap this Monday up with our good word for the day. Friday we talked about stop and ask for directions. Today, read the signals with your children. Psalm 34:11. My children, listen as I teach you to respect the Lord. Smithsonian Magazine once featured a British master stonecutter named Simon Verity. He restored 13th century cathedrals in Great Britain. As the authors watched him work, they noticed something fascinating. Verity listens closely to hear the song of the stone under his careful blows. A solid strike and all is well. A higher pitched ping could mean trouble. A chunk of rock could break off. He constantly adjusts the angle of the chisel and the force of the mallet to the pitch, pausing frequently to run his hand over the freshly carved surface. Verity understood the importance of his task. He knew one wrong move could be devastating, causing irreparable damage to his work of art. His success was rooted in his ability to read the signals his stones were sending. If you're a parent or someone who works with children, you need to hone your skills at listening to them, especially during times of discipline and guidance. It takes a great deal of patience and sensitivity to interpret a child's responses. But if you listen carefully, they will tell you what they're thinking and feeling. And God will help you to do it. Isaiah 50 verse 4. The Lord has given me the tongue of the learned, that I should know how to speak a word in season to him who is weary. Each changing season in a child's development raises different questions, calling for different answers. To have the right answer, you must be tuned in to the question they're asking at the time. Not only will you be imparting to them the wisdom they need at that time, you will be teaching them how to do it with their own children, from generation to generation. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.